Hello, welcome back. This is SeeWing Yee from the Yee Real Estate Network. I'd like to go over this video nice and quick, short presentation, and I'm going to reference Redfin article a few days ago, and the headline is U.S. home prices hit all-time high. That's right. Some of you may not believe that. Some people think there's a housing crash of 50%. Yeah, those come from the doom and gloom housing crash bros and housing crash sisters out there who are, producing YouTube contents and calling for home prices crashing because, why? Because they are doomers. You know what that means? Doomers, they love to scare people so they could get clicks and views and subscribers so they can monetize their channel to the expense of gullible consumers out there who get paralyzed and become fearful because of this misleading housing crash information, which is have no factual confirmation behind them. I talk about that for my other channel, YouTube's, but yep, stay away from this doom and gloom housing crash content creators out there. They are very manipulative. They are very unethical. Have a self-interest to pay their rent by reporting negative information so people can click in. All right, getting back to this headline news. U.S. home prices hit all-time high, driven partly by big upticks in San Francisco. Yes, that's where I live for the past almost 40 years. And in South Florida, there's a housing boom as well, West Palm Beach, South Florida, which is right above Miami. So according to Redfin, prices rose 2.2% year over year in June to a record high. Haven't we heard that? How often in the past few years we've been hearing about record high housing this, record high housing that, anyway, growing demand, right? Still, even though we're going through some challenges in the housing market, the demand is still growing, okay? And the medium home sales price rose 2.2% year over year to an all-time high of $408,776. That's the median price, but the average price is in the $440,000. So in the past 4 or 5 years, since the pandemic days, a few years ago, average home prices was way below $440,000. So I tell you, whether you're homeowners, whether you're real estate investors, take action if your goals are to buy real estate, because real estate is not going to get any cheaper. All right, because of uh, economics 101, demand is greater than supply. There's a shortage of homes, depending on who you ask. Yeah, there are anywhere from 2 million to 8 million shortage of homes out there. Okay. Sixth grade economics 101, when demand is greater than supply, which is the case still, as we're talking 2026, housing prices will not go down, to say the least. So here's a systematic home price reaching record high back in 2012. Average home was only a mere 150K. See, that's why we all need to take the philosophy, buy real estate and not wait to buy real estate. This kind of information are being hammered down every single time consistently by reputable experts, and yet the majority of people out there in the US continue to wait on the sideline. A lot analysis paralysis, waiting for the perfect time. There will never be a perfect time to buy real estate, either a primary homeowner or as an investor. So I'll take it with a grain of salt, because I've been in real estate investing for several decades over the years, and that's how it goes. All right, you see the systematic increase in home prices from 2012 all the way until 2026. See, from 150K, a mere what, 14 years ago, the median price now is up to the low $400,000. Okay. In every 10-year cycle, real estate will always go up in prices, even though there is some correction housing in certain parts of the country. But all this is temporary. It'll always work itself out. Housing is a shelter. Everybody needs to live somewhere, and the lack of supply of homes will continue to persist for the foreseeable future. All right, that's how it is. So buy real estate in a way. That's the all right. Home prices rose largely because home buying demand picked up. Right, slowly when people need to buy, they need to buy. Life happens. They need to do it. U.S. existing home prices ticked up 0.1% month over month to a seasonally adjusted annual rate of roughly 4.4 million. 4.4 million transactions. That's a very healthy, stabilized, boring market, the highest since November 2022. On a year-to-year basis, existing home sales rose 4.2%, right? Sales has been rising year over year since last June. So closed home sales reached second highest level since 2022, right toward the tail end of the pandemic. As you can see by this chart, yep, that's what's happening. So pending home sales rose in June. They ticked up 0.5% from a month earlier in June to their highest level since 2023. Okay, pending home sales also picked up. Okay, as you can see right here, April, May 2026. Okay, pending home sale is at this amount. So wealthy coastal buyers drive up home prices and sales. Affluent Bay Area, by the way, I also recorded a video talk about the housing boom, the AI boom, Anthropic and OpenAI, all those IPO people bidding up $1 million over asking prices in San Francisco Bay Area, where I live for almost 40 years. And I see it with my own eyes. But this temporary, hopefully temporary AI boom in the San Francisco Bay Area is short-lived because you can't overbid for crazy home prices like this. It's just going to create chaos. So Florida, again, similar situation. There's a lot of demand for South Florida. All the wealthy people, all the billionaires are moving to Miami, South Florida area. And that's part of the reason for the South Florida home buyers boom as well. SF, median price, home price increased 9.2% year over year. That's right. Real estate is local. Real estate is no such thing as national real estate, right? It's all about your local market. So tell me what's going on in your local market, wherever you're watching my video from. All right. So again, San Francisco is very, very hot right now. It's too hot. It's too crazy, according to Redfin. All right. So let me see what else as we conclude this. Competition for homes hit its highest level in a year. That's right. Demand is slowly creeping up. Even if the mortgage rate right now is around 6.5%. Imagine if the mortgage rate in the foreseeable future, in the next 2 years, come down below 6%. It'll, the floodgate gonna be open. There'll be more competition. So there'll be much more demand. It's gonna cause home prices to skyrocket. Right now is a good buyer's market. There's a lot of deals out there for home buyers and for investors out there. So the less competition in a buyer's market, you could negotiate for better deals, right? So that the opportunity is right here before you, but at the same time, too many people still waiting on the sidelines, timing the market. You cannot time the market, right? You got to pull the trigger if you find a good deal. It's not about the mortgage rate. The mortgage rate is pretty average on a historical basis, believe it or not. It's not, extremely elevated by on a historical basis. That is, it seems like it's very high rate because the home price itself, the home prices nationwide has skyrocketed since the pandemic boom. All right, so so that's pretty much I have to say. that's my conclusion. I don't need to go through the bottom here. You can read this article on your own. All right. So my takeaway is, yep, home prices still rising, but at a very, very minute level. Still is a stabilization situation. So there's no housing crash according to the data. The job report, the employment situation is still very, very stable. There's no stress in the home buyers market. Home prices continue to go up or flatten in many markets. And the mortgage rate going to stay, according to my prediction, the mortgage rate is not going to change too much because of the Iran war and all those economic uncertainty out there. So the mortgage rate, you're not going to see, if you're waiting for the 4% mortgage rate, forget it. You'll be waiting forever. I mean, the mortgage rate, the interest rate of around the 6%, it'll be with us for a while longer. I don't know. No one have a crystal ball, but 2026 is just a normal average year. So yeah, 2027, who knows? But I don't see any drastic changes up or way down associated with the mortgage rate. So the end result is fundamentally the housing market is still going pretty strong so far. So if you're in a market to buy a primary home, if you qualify, if you have a long-term perspective, by all means buy. If you are investors, there's so much opportunities as a real estate investor, so many great deals. You find great deals regardless of a mortgage rate, find a cash flow properties. If you need help, of course, come to us. Subscribe to my YouTube channel also, and also put your email into my website so you can become a free member of our real estate investing community, the Yee Real Estate Network. So every week that in your email inbox, you'll receive great free contents around real estate investment opportunities, more education about the housing market like you've been hearing now. All right, that's all I have to say. Thank you for watching. This is SeeWing Yee from the Yee Real Estate Network. Have a nice day. Bye-bye. I'll see you soon, shortly next time. Bye-bye.